Hello and welcome to WION World is One. I'm Kanishka Sarkar and today let's put the spotlight on India's gold imports. Now, India has raised import duties on gold as well as silver from 6% to 15%. Now, this isn't just a tax hike, it's a strategic move to protect the rupee, which is currently under pressure from high oil prices and the ongoing West Asia conflict. As the world's second largest consumer of gold, India is effectively asking its citizens to put their golden dreams on hold for the sake of national balance sheet. What does this mean for jewelers, wedding buyers, investors, and even gold loan companies? Let's break that down on this bulletin with Dr. Suyash Bhatt, Director at AFTI, Academy for Finance, Technology and Innovation. He's joining us live from Dubai. Dr. Bhatt, thank you for joining me on WION today. Firstly, tell us, how is the industry reacting to it, the big and small players, some of the key concerns that they've highlighted so far?
Good afternoon, Kanishka. I believe after the announcement, you could see that the stock prices of all these gold companies have fallen dramatically. And from a economic perspective, if we see gold is the second largest ticket item where the precious dollar is being spent. So close to $72 billion worth of gold is imported in India. And this duty of raising it from 6% to 15% should deter buyers because, as you know, in simple economics, if things become expensive, people postpone the decision of buying. But this affinity towards gold that Indians have is not something new, and this move is also something something new. In 2022, if you remember, the government had the duty of 15%, which was levied, and this was post-COVID, and it was relaxed in 2024. And during the same time, the free trade agreement and the CEPA with UAE, which is again one of the largest supplier of gold for India, was signed. And this duty was brought down from 15% to 6% to relax the buying and boost the segment, the jewelry segment, and the gems and jewelry segment in general in India.
Right.
And now that under the change scenario, I believe this move is being done basically to save the precious dollar and prevent people from buying off, at least postponing them from making this decision of buying gold.
Correct. And while we wait for when that relaxation might come, speaking of the consumer front, with the effective duty jumping from 6 to 15%, a standard 10-gram gold purchase, I believe, would, roughly the price would increase by 14,000 to 15,000, right, overnight. So for an Indian family, say, who's planning a wedding this winter, does this make gold unaffordable, or will we simply see a shift towards lighter boutique jewelry designs?
Yeah, that's a very good question. In fact, this is something which is very relatively new from a consumer perspective, since the price of not only the duty price, but even the gold prices have run up significantly.
Right.
So for an average Indian buyer, if they want to invest or buy these jewelry, there is a change in the market. Also, you have seen since last 2 quarters where the jewelers have come up with lower caratage of gold. So something which was not so popular in the past in India, but 22 carat, 18 carat. But now even you'll have branded jewelries offered by big retail chains, even at 9 carat. So this basically they are also trying to adjust it to make consumers buy these gold and make it more affordable. But yes, if you talk about big ticket purchases, I think definitely those who can would probably want to postpone this decision. And there is already a huge, you can see many of these, celebrity brand endorsed jewelry brands where they are not actually gold jewelry, they are gold plated or, silver with gold plated. So there are already alternatives coming up in the market, not just because of this customs duty, but in general, because the prices have really gone up and Indians, for one, can't live without gold. So, they just to satisfy their inert consumption of gold, I believe these new segments have emerged. So, but in the current scenario, I would say that there would be a huge impact on import, and this would deter import of gold.
Correct. And, like you said, we might see these lighter jewelry segments gaining further traction given the current scenario. But do you also think that we could be entering an era where jewelers will become recycling centers, perhaps with the new gold becoming expensive? Do you expect a surge in consumers bringing in old family gold ornaments to, say, exchange or upgrade rather than making fresh buys?
In fact, that's a very good point. We were just yesterday, on day before, since this whole conversation started, we were trying to calculate and put a number to it. If the Indian GDP is close to 4 trillion US dollar, you'd be surprised to know that the amount of gold that Indians have currently is more than that. That's close to 5 trillion US dollars worth of gold is owned by Indian retail individuals. And this, in fact, is a very good opportunity for recycling some of these gold and that coming back to the market. So from a jeweler's perspective, you would already see them coming up with schemes where they're processing old gold and selling the same gold in a new format, but maybe a lower caratage and also taking care of the existing requirements. So many of this old gold will also come to the market because prices are at a record high, and this new duty will also make things more expensive. So this the recycle market is also in for a huge uptick from a domestic market perspective.
Right. Now, Dr. Bhatt, this old gold market and the light jewelry segment, how do these actually impact jewelers' margins? And also, do you think jewelers are more worried about weaker demand than higher margins on old inventory?
So yes, I would say that there are, again, if we talk purely from a jeweler's perspective, it is a sentiment killer. Since last 3 days, I believe the kind of the fall in stocks that you have seen. Also, in general, in the retail jewelry stores, also you would find that the number of people going in to make these big ticket purchase has significantly got impacted. So from a business perspective, the jewelers are jewelry companies, small or big, all of them are in for some kind of a downturn for at least for next 2 to 3 quarters. From a margin perspective, again, it's a very, I mean, some part of the market is organized, most of it is unorganized. So it's very subjective from a business perspective. But I would say that as the caratage goes down, I believe the making charges would also go down. So you would be in for some kind of a new segment getting created for these dwellers where the margins are lower, but at the same time they're trying to target big ticket or type of volume with lower caratage. So the price is also lower because the caratage is lower, and you would probably come up with new designs, and that may be a new trend that you may see over a period of time for at least 1 or 2 quarters. But yes, margins and business both will be affected significantly, and the jewelry segment would have to come up with really something new to counter this. Another way by which this could be done is by probably shifting to diamonds. Maybe diamonds these days are more attractive than gold in terms of price as well. So you never know, the market may shift towards that, and the consumers may also prefer diamonds more than maybe gold.
Right. Dr. Bhatt, you've already highlighted some of the alternatives as far as the jewelry segment is concerned with respect to gold. But what about investment? Do you think there could be more demand for, say, SGBs, or gold ETFs, which don't carry this kind of import duty burden?
In fact, you would see that in the last quarter itself, there was a huge, I wouldn't say an alarm bell, but there were many ETFs who had stopped accepting new fund investment for gold, also for silver, and one of the reason being they were trading at a record high prices. So I believe from an ETF perspective, the normal SIPs that go to equity market versus commodity, that has significantly cooled down in last quarter because of the volatility. Also, you would know that gold prices have corrected significantly, so the sentiment also has affected negatively. But yes, all said and done, there is still close to 700 to 800 million dollars worth of ETF flow which goes to gold and from a retail investor. But this is significantly lower than probably it was 2 quarters back. And many retail investors may still prefer ETF. The reason being gold, again, from an economics perspective, gold is the best hedge against inflation. So some may still stick to this, but if you see purely by data, I think the consumption or the subscription number has gone down, and also the market participants are discouraging, more inflows because they can also see that the prices are at the peak, and when it falls, maybe it's a loss for retail investors. So you may see a further downtick in subscription of ETFs of gold, though they don't carry these kind of charges that are there. But from a retail investor's perspective, the subscription number may go down rather than going up. Not because of the duties, but because of the price changes or the volatility in gold.
So, Dr. Bhatt, that's all about the information for the retail investor. But lastly, I also want to understand a little bit about concerns. Now, history does show that when this duty crosses that 10 to 12% threshold, the grey market or smuggling, that becomes more prevalent. It becomes lucrative again. So, do you think the government is risking a return to that, illegal trade? And how does this affect the organized retail chains?
So you are right. In fact, before this duty was brought down to 6% in 2024, from 2022 to that time period, there was a huge amount of smuggling which was happening of gold, and it did have an impact in the retail market as well, because for all you know, in India, many do, though we have digitized a lot, but many do cash-based purchase. So it does have an impact in the retail market. And these illicit means of bringing gold also may go up, which is seen from the past data. And in fact, this market was killed or spooked in 2024 when the duty was brought down to 6%. And there was a huge uptick in even formal sales. So if you see any jewelry or an organized jeweler company's balance sheet, you would find that there's a 4 to 3 times kind of a jump in their sales from 2024, simply because everything which was informal came back in a formal, economy, and because there was no incentive for buying in the gray market. Whereas this practice may start again. But again, these things don't happen immediately. It will take time, maybe 1 or 2 quarters to be seen from an economic perspective, if this stays for a longer time.
Okay. All right. Thank you, Dr. Bhatt, for joining me with all of those insights. On that note, I'll let you go.
Thank you.
Well, with that, the government's message is clear. Cut non-essential imports and protect foreign exchange reserves. But for an industry worth nearly 8 lakh crore rupees, this could mean slower demand, higher prices, and a possible rise in smuggling risks. Consumers may shift to lighter jewelry, digital gold, or exchange old ornaments instead of buying fresh. Now, the big question is, will this policy help India's economy without hurting millions dependent on the jewelry business? Stay tuned as we track the story on WION. I'm Kanishka Sarkar. I'll take your leave. Thank you for watching.